Good afternoon and welcome, everyone. Welcome to our webinar today on cash management strategies for small business owners. You know, this is one of the biggest challenges business owners face. And now that the interest rates have moved up and a lot of our expenses have increased over the last 12 months, cash flow management becomes even more important. And I think it's one of those things that doesn't matter how long you've been in business, it's something that you're always aware of, and you should always be aware of, because it is one of those things that really challenge you. You know, even if you've got a really good idea with a great concept, without cash flow, this doesn't become a viable business idea. For those of you that haven't met me before, my name is Andrew Patricio, and I've always been a business owner. But for the last 25 or so years, I've been educating and training and trying to inspire business owners to build successful businesses. And it's really interesting when you work with so many small businesses, you realize that this is the thing that they really struggle with. You know, the rest. I mean, obviously, all the things are important in your business, your sales, your marketing, building relationships, networking, all those things are key in your business. But running out of money is one of the things that a lot of us struggle with. And I must be honest, it's been my biggest challenge as a business owner over the last 25 years. You know, how do I ensure that we have cash flowing through our business so that we can ensure that we cover our expenses, that we can pay our employees, pay our suppliers, and have a little bit over for us at the end of the month. So it's something that has really been top of mind for many years. And that's something I think that doesn't become easy. You know, it doesn't get easier as you've been in business longer. You know, maybe one of the advantages as you've been in business longer, you may have access to more capital, but it's still a big challenge. So what I'm going to share with you today is how do we manage our cash flow? How do we ensure that we're managing our cash flow, that we know how much money is flowing in our business and out of our business, and how do we ensure that that cash flow is positive? Because if you've got a positive cash flow, you can survive. If you don't have a positive cash flow, you can't survive. It's very, very difficult. And also understand with all the changes that are taking place, all these things, these moving parts that we've had over the last year and during COVID have created a lot of stress for some of our businesses. And a lot of us have money we have to pay back. We've got loans that we took out that we didn't expect to take. All of these things are different or unique challenges that we go through as business owners. But let us just start off right at the beginning. You know, I often say to people, you know, when they ask me, you know, what is the number one reason that small business owners fail? And for me, it's really about cash flow. And I've seen this many times over the years, is business owners with great ideas, great concepts, just cannot survive because they don't have cash flowing through their business. So it's really important that you understand this. If this is the number one reason that businesses fail, maybe it's something that you as a business owner need to focus on, something that you need to look at, something you need to understand, something you need to work on an ongoing basis, because this is the key challenge that we go through. And I can't tell you how many times I've had this discussion with business owners over the years, and you know, this is the issue. The other reason I think it is one of the biggest challenges for small business is that for us, you know what, raising capital is not easy, really not easy at all, and it never gets easy. I find it very interesting, especially when I work in different parts of the world. And people will ask me, they'll say to me, you know, do banks lend small businesses money in your area? And again, these are some of the things that are unique to small business, because if you're a larger company, you've got the accounting, you've got the financials, you've got the backing, you've got all of that. You can go to your bank and you can raise capital. I'm not saying easy, but easier than a small business. And these are some of the challenges that we face. Also, another thing that we face is we can't get credit as easy as large companies, you know, especially in the early stages of your business. And some of you, even the late stages of your business, you know, you're buying inventory, which you're paying for before you sell it, which is a big, big disadvantage because you're laying out that money up front, then you're going to be selling. And that really is one of the key challenges that we go through as small business that big companies don't face or don't often face, is they don't have to pay for inventory up front. They've got a reputation, they've been in business for a while, they've got somebody that will vouch for them, and they can borrow money. Even if it's not cash, they can get their suppliers to finance some of the growth of their business. So understand that this is one of the main causes of cash flow. The other reason that we have cash flows in small business is because often if we're selling to bigger companies, or like in my case, I sell to economic development departments, I work with governments, I work with organizations like that, is they dictate the terms to you. So you can't go to them and say, well, my terms are, I suppose you can do whatever you want, but you can't. Often they will dictate, they'll say you will pay you after 30 days, or we'll pay you after 7 days, or we'll pay you when the project is complete, whatever it is. So understand that this is another thing that creates stress or anxiety problems for us. And this is why cash flow is one of the key challenges that we face. The other thing I want you to understand, and I think this is very, very important that we are aware of this. In previous webinars, I've discussed the different financial statements. I discussed income statements. I discussed balance sheets. I even discussed the break even with you. But here's the thing you need to understand is that cash flow is your responsibility, because at the end of the day, whether it's your employees, whether it's your suppliers, whether it's the government, they're going to come to you for the money. So the buck stops with you, and you've got to understand this. Doesn't matter that you've got an accountant. Doesn't matter that you've got a really good bookkeeper that's working with you. The key thing you need to understand here, your responsibility is cash flow. So understand that and learn how to manage it, learn how to deal with it, learn how to become more efficient at managing the money in your business. Actually, that's a really important thing, and something that all of us need to remember as business owners is, separating yourself from the business is a really good idea, and understanding that the cash in the business doesn't belong to you, it belongs to the business, and separating those two really is the key. I mean, I think of my business. So I own 100% shares in my business, but I never think of that money in the bank account as my money. It's not my money, it belongs to the business. And I've got to understand that. And the reason it's really important you understand that, even if you've got a lot of money in the bank, but if you owe a lot of money, well, really, it's not yours at the end of the day. So understand the importance of that this money in the business belongs to the business. And I think if we separate ourselves from our business and think of it like that, I think it's really, really helpful. And I've seen this many times over the years, actually, is people that run very profitable businesses. So what that means is they make very good profit margins on their products, but they still run into cash flow problems. I remember years ago, in my early days as a business owner, there was an opportunity to supply restaurants with groceries and fruit and veg and things like that, and a very, very profitable business. And I remember going to the bank and having this discussion with a banker, all confident in my early 20s, all confident about this new business idea that I'd come up with, that I was going to be very, very successful. Anyway, I went and see this banker and had this discussion, and I spoke about the profitability. I was saying to him, the profit margins on a lot of our products are 30%, 40%, 50%, we even have up to 80%. And I want the bank to give me a loan to start this business. And I remember this banker saying to me, he said, what if the restaurants don't pay you? And it was one of the best questions this bank had ever asked me, because I never thought of that part. I just thought about buying stuff, selling stuff, and making profit. That's all that my focus was on. That's all I cared about, was buying products and services, reselling them, and making a profit. The part that I failed to understand, because I was a very young business owner, was that sometimes people will not pay you on time. And I want you to understand this, and I've seen this many times over the years. I mean, my customers, I'm sure they realize this, is that I'm paranoid about getting paid, absolutely paranoid, because I realize that, you know what, if they don't pay me, I could be out of business. If they pay me late, I could have to pay my suppliers later. So I think understanding this, that you can be a very, very profitable business, your profit margins could be very good, but you could still have a major cash flow problem. And I think of businesses, for example, like retail type businesses that have large inventory. Every now and then I'll walk into, for example, a gift store or a business like that, and you see the masses of inventory that these businesses carry. And even though the profit margins on the inventory could be quite high, if they're not moving that inventory fast enough, if they're not generating enough sales, that could have a big impact. So I want you to understand that every single business, doesn't matter how big or small it is, has to understand that even if they're very, very profitable, you could have a cash flow problem. So understand that if the money's not coming in fast enough, the inventory is not turning fast enough, things like that. And a growing business is actually one of the biggest challenges, because you've got to understand that if a business is growing, what happens is often we're employing more people, we're buying more inventory, and if we're selling on account, we're increasing our accounts receivable. So if you understand that as a business grows, it actually ties up more money. So this is why this could be a big challenge, is that even a fast-growing business could go out of business just because it runs out of cash flow. So I want you to be aware of all of these different things that could have an impact on our businesses, on our lives. And if we understand this, it's going to make us better business owners. So what are the causes? Because if we can understand, and I've discussed in maybe not too much detail, a few of these already as I've been discussing, but these are the main causes of cash flow problems. And I think as a business owner, is that once you're aware of the problem, you can then deal with it. And I think that's really the key, is understanding what creates the issue in the first place. So what is the problem? And yes, some of the issues that create cash flow problems or create problems for small businesses as they grow. The first one, which sounds quite obvious, but it's something that every single one of us need to focus on. And often especially when I have new startups, when I run new programs where people are just starting up, and their focus is a lot on getting business cards and registering their business and getting insurance and all of these things. And I always say to them, you know what? The key thing here is to focus on sales. Sales is the most important thing in your business. And you must never forget that. All these other things are important, but sales solves most problems. So, and a lot of us have gone through quite a difficult stage over the last 3 or 4 years. And some of us have to almost get back into sales mode again. We've got to be looking for more leads. We've got to be building more relationships, all of these type of things. But don't neglect that. You want to get sales. And ideally, your sales need to be good sales. And what do I mean by that? Sometimes in business, you sell stuff, but you're selling it on terms, 30 days or 60 days or 90 days, whatever it is. And that's still a sale. And in your accounting, it goes through as a sale, and the profit you make goes through as profit in your business. But the key thing, we've got to understand is that when we sell stuff, I think it's quite important for me as a business owner to know when I'm going to get paid. So think about that too, is that when you generate sales, you want to make sure that you're going to get paid for those sales. So that's the first thing. And the second thing is profitability. Just be very, very careful. I've seen many, many business owners over the years, being short-term focused in the sense that they look for the volumes. They want to sell a lot, low profit margins, big volumes. Just be very, very careful of making that decision. The problem you've got there is that if you start by charging too little for your product or service, it's very, very difficult to increase the selling price, or can be difficult. If you charge a reasonable price at the outset, then you can discount. So just be very, very careful. But ultimately, you want to generate sales that are profitable. And secondly, that you get paid on time. So think about that. You just don't want to just go after sales for the sake of going after sales. The second one, and again, this is not a challenge for everyone, because most of you, I'm going to assume, you'll sell cash, your product or service for cash, or at least close to cash. But for those of you that, like my business, that aren't a cash business, that you have to wait for your customer to pay you after the job's done, just be very, very careful of this. Because sometimes I've heard business owners saying things like this, for example, I don't feel comfortable collecting money. You got to very, very quickly be comfortable collecting money, because you've got to understand that sometimes this is the biggest problem. I remember an example years ago. Small business owner came to me and she said to me, Andrew, I'm desperate. I need to go to the bank and get a loan. And firstly, I said to her, you should never go to the bank when you're desperate. And secondly, the banks are always a challenge to raise money for small business. And the reason is that most of our banks are asset-based lenders. So they're looking at you, supplying assets to be able to get a loan. And that makes it really, really challenging for small business. Anyway, so I went to a business and I wanted to try and understand what was causing the problem. Because if I could identify what was causing the problem, we could solve it. So one of the first questions I said, what are your sales every month? And she said, about $100,000. I said, okay. And I said, what are your terms? She said, 30 days. So I said, okay. So if your sales are $100,000 a month, and your terms are 30 days, your accounts receivable should be about $100,000. She said, but they are $150,000. I said, well, there's the problem. See, you said that your terms were 30 days, but you've given some customers more time, maybe 45 days, and that's what's created the cash flow problem. So in her case, it was a very, very good example. She didn't need to borrow more money. She needed to collect her money. So just be very careful of that and be very, very disciplined. Make sure if you're selling on account that you regularly follow up with your customers to make sure that they pay. The third thing is expenses are too high. I don't know if anybody's been reading the media in the last few weeks, but a lot of the bigger tech companies are laying people off. Companies like Amazon and Meta, which is Facebook, are laying people off. And one of the reasons they're giving for that is they want to become more profitable. They want to become more lean. They want to become more profitable. And one of the things that I was reading this morning, which is very interesting, is now that they're calculating revenue per employee. So if they're doing $1 million and they have 100 employees, they need to know how much revenue they're generating per employee. So they have realized, because for the last 3-5 years, especially during COVID, tech companies were doing so well that they were just employing people. And then very, very quickly, they realized that they had too many overheads, or too many expenses, too many fixed costs in their business. So what they've started doing is laying people off, which is one of the easiest ways to reduce your fixed costs in your business. So just be aware of that, because a lot of us over the last 2-3 years our expenses have gone up. Maybe our rent has gone up. Our interest rates have definitely gone up. Our bank fees could have gone up. There's so many different, insurance could have gone up depending on where you are. So all of these things have changed. And one of the things that I encourage you to do is to go through every single expense in your business, reconcile it. So go through every single expense and see which are the expenses that we need and which ones can we get rid of. Because what happens often in business is we subscribe to these different things and we pay under $20 a month or $30 a month or whatever, and these things start adding up. And make sure that you control your expenses, negotiate, analyze your expense, do this on a regular basis, see if you can't negotiate better prices. The next one is a really key problem for small businesses. I know when I was in retail for 11 years, this was my biggest nightmare. I must be honest with you. Inventory management was my biggest nightmare. I was very, very aware early on that inventory was my biggest. It tied up my money the most, So, and this was always very, very difficult to deal with, because on the one hand, you didn't want too much inventory. On the other hand, if you didn't have enough inventory, you couldn't generate sales. So I was always stuck in this very, very difficult situation: is how much is the right level of inventory? And I remember, some of the decisions going through what we should sell and what we shouldn't sell so that we could keep our customers was really, really challenging. And I must be honest with you, I really struggled with inventory management. And the reason was very, very simple, is we didn't have money to be able to have too much inventory in our business, and this created absolute nightmare. So making sure that you manage your inventory and create systems and processes, and this is exactly what happened in our business, is eventually I learned how to manage the inventory in my business. So once I learned how to manage it, that solved part of the problem. And the final one, as I mentioned earlier on, is growing too fast. So these are the key reasons that you have cash flow problems. So you want to be aware of these and understand them. You want to make sure you're always focusing on generating profitable sales, that customers pay you on time, that you're collecting your money fast enough, that your expenses aren't too high, and that you're managing inventory. All of these things could have major impact on the success of your business. So one of the things you want to be doing as a business owner is what causes cash flow problems are common for SaaS that you want to advise us on, give us some tips. So SaaS business, well, really, when it comes to any business, for example, like an online business, like a SaaS company, you can have similar problems, except that you don't have inventory, so that won't be one of your problems. And the second thing you won't have is, depending on the nature of your business, you won't have any accounts receivable. But the things that will have a big impact on your cash flow will be your sales and your fixed expenses. So if you're a SaaS business, those will be the two. SaaS is software as a service, if any of you are not sure. So if you're a software as a service business, those would be the two key things. Are you generating enough sales, and are you controlling your fixed expenses? And that'll influence your cash flow, okay? So really, most of those issues are covered here, okay? So understand that it doesn't matter what your business is, even if you're not selling a product, these are the type of things that will have impact on your cash flow. So understand that. So one of the things you want to think about, doesn't matter whether you've got a service business or you got a product business or you got an online business, doesn't matter what the business is how much sales do I need to cover? How much sales do I need to generate every month to cover my outflows? So to know what my outflows are, I need to know what my fixed expenses are. I need to know what my cost of sales are, because that'll impact the inventory that I have to buy. So once I know that number, it'll give me an idea. So it's very, very similar to your break even. When we're calculating break even, we take our fixed expenses, we divide by our profit margin, and they'll give our break even sales. Okay. When it comes to cash flow, you want to know that number. So how much flows out of your business every month so that you have enough money coming in every month to be able to do that. And if you don't have enough money, you want to borrow it on time, so you want to go early on. I think one of the biggest challenges we have in small business is that we don't time when we're looking for money properly. We sometimes go and look for money when we're desperate, it's last minute and we're struggling, and that's when we go and look for money. And that's usually the wrong time to look for money. If you're in a situation where your business is not doing so well, you're having cash flow problems, then going to look for money, it's a very, very difficult time to do that. So I encourage you to do it early on. The challenge you've got, and I'm going to show you how to do that today, is how do you calculate how much you need? And that is the biggest challenge, because if you ask for too much money, you're going to be turned away. If you ask for too little money, you're going to have the same problem and have to go back to your investors or bankers or things like that, which you don't want to be doing. So you want to try and calculate that. I don't actually like this slide, but I left it in there anyway, because I used to have this partner, and he used to always say to me, how much money should we have in the bank account just in case? And there's no right number. Some people will say 3 months, 6 months, 12 months. I know he told me that his grandfather used to always say that you needed to have 2 years of expenses in the bank account as a bit of security. And the truth was, when he was in the business with me, there was no way we'd have 2 years of security just because of the way he spent money. But I think it's quite comforting as a business owner when you do have a bit of security. I mean, think of it. Some of us survived COVID because we had some money put away. Others obviously had to borrow money or applied for government funding. But having a bit of security is quite a good thing. So if you're looking for a number, and maybe 3 months is not enough, maybe 6 months is the ideal. But I must be honest with you, all these years, I never had too much money in the bank. Now that I've been in business for quite a long time, I think I've hopefully solved that problem. But in the early days, there was no way I had 3 months or even 2 months or 1 month of money stacked, put aside. Would I be happy to have that? Absolutely. But the reality was, I often wasn't in that situation. So one of the things that we recommend, or I recommend to business owners that they work on, is a cash flow forecast. And often when we speak about cash flow forecasts, some of us don't always explain it as well as we do. But really, a cash flow forecast is something that you should be doing every year, every single year. Doesn't matter how experienced you are, doesn't matter how smart you are, doesn't matter how well you think you know your business, you should be doing a cash flow forecast every year. And basically, what it shows you is the money flowing into the business and flowing out of the business over a period of time. So you're doing a projection of what's happening. But let me give you some really good advice. One of the things that I've realized over the years, which is a really big problem, is that sometimes the owners are the problem, where we draw too much money out of our businesses. Either we take a salary that's too high, or we incur too many expenses, or whatever it is. Or I just think sometimes, and I've never been like this, but sometimes business owners, because people become a business owner, it's almost like a prestige thing. Well, now I need a new car and I need to, do things to show that I'm successful. And just be very, very careful of that. So my advice always to business owners is always create a personal budget for your home. And a personal budget for your home is basically the same as creating a cash flow forecast for your business. All it shows is what money do I expect coming into my business or into my household every month? And what money do I expect to flow out of my business or out of my household every month? Okay. So when you're doing a budget for your household, you want to have inflows and outflows. And I encourage you to do this. I've been a business owner for many years. And let me be honest with you, I don't have to take a fixed amount out of my business every month, but I still do, even after all these years, because it's the discipline I used in the beginning to survive. So in the early years of my business, I was very frugal, and I used that discipline to survive and to grow and scale my business. But then I haven't lost that discipline, and I think it's very, very important. So I will often say to business owners, either take a fixed salary, depending on what stage your business is at, either take a fixed salary every month or take a draw every month that it's a fixed amount, and then live off that. Don't use your business as a bank. I've seen this many times. People will take out a fixed amount every month, and then when they need extra money, they will take it out of their business. Just be very, very careful of that. And what I'd like to say is that the more discipline you have in your personal life, the better it is. So if you're a frugal person like I am, be very, very proud of yourself, because let me just say something to you. It's one of the best ways to build a business and one of the best ways to accumulate wealth. And I've seen this many, many times. I've got the advantage of being older probably than all of you on this webinar, and maybe not some of you, but most of you at least. And now when I see people that were very frugal and disciplined and things like that, I look at these people and I think to myself, the only reason you've accumulated wealth is because you were frugal. You watched every dollar, and you still watch every dollar. And some of the most successful business owners I know are like that. Okay. So understand that the cash flow forecast teaches you discipline, making sure that you manage the inflows and outflows of money in your business every month. And the other thing is, some of you maybe have heard, business owners that'll say things like, I sign all checks in my business. That's, for example, one of the disciplines business owners will sometimes have, because then it gives them the opportunity to, look at every single check that's going out, every single expense, although we don't use checks so much anymore, but things like that. One other thing, for example, I was thinking as I was saying this, sometimes using credit cards could be a problem for us. I don't know if any of you like this, but I know I'm like this, is that it's easier for me to spend money using a credit card rather than using a debit card or cash. Why? Because it's almost, I don't have to worry about it. I only have to pay for it later on. So it's almost like, don't worry, spend it now and pay later. Just be very, very careful there. That discipline in your personal life and in your business life is very, very important. And I've seen this many times. I mean, people that had very successful businesses when I was much younger and, just ran out of money, just couldn't manage their cash flow effectively, and eventually ran out of money. And now, are working for bosses, which is really sad, because I knew them as very successful business owners, or seemed like very successful business owners. So when it comes to cash flow forecast, some of the questions people ask is, how do you do this? Because you'll go to your bank, especially if you're a new business, you'll go to your bank or you'll go to investors or venture capitalists or angel investors, and they'll say to you, you need to create a cash flow forecast for the next 3 years. And some of you might say, well, that's very, very difficult. And you're absolutely right. It is difficult. Nobody said it was easy. I know on a lot of these programs that I run a program called Start a Company in a bunch of cities. One of the conditions of getting on the program is creating a cash flow forecast. And one of the challenges that business owners will often say to me, they'll say to me, you know what, I haven't even started. How do I know how much revenue I'm going to generate? And I say, well, you don't know. But you need to do the research so you understand So understanding your industry is really important. I'll give you a simple example. The other day, I run a bunch of groups online, and somebody messaged me, left a message on one of the groups saying that they wanted to run a coffee shop. So they'd been working in tech all their lives, and now they've been laid off. They can't find work in technology, and they think they might as well just start their own business. Firstly, I don't think that's a good reason to start a business. Just say, well, I think I might as well just do it, and just be very, very careful. I mean, I think it's a very, very difficult decision. I get very, very concerned when people assume things. I'm working in technology. I think I'll just open a coffee shop and make some money. That's not how things work, okay? But some of the advice I gave this person, I don't know if they took it, was to go and actually work in a coffee shop, just so they understand the operations, understand the marketing, understand how they manage their expenses and their overheads and things like that. And I'm going to say the same thing to you, is that cash flow is based on educated assumptions, okay? So it's doing your research, understanding. For those of you that are existing businesses, your big advantage is you've got previous year's numbers. So you don't have to guess so much. I mean, you're still guessing, but you don't have to guess so much, because you can look at last year's numbers and do forward projections. Okay, so that's what you can do. So that's the advantage of being an existing business. If you're creating a business plan, let's say your banker or any of these programs, government programs available out there, they've asked you to create a business plan. Whenever you are creating a business plan, you're doing a cash flow forecast, what you want to do is you want to base your decision on information, educated assumptions, and you want to put those assumptions into the business plan so that the person reading it understands it, okay? And then a very good idea I'd recommend to you when you do create a cash flow forecast, and I do this, I look at different scenarios. I look at worst case scenario, probable scenario, and best case scenario. And let's just think of these different scenarios. I mean, in my business, for example, we've just come out of 3 very busy years during COVID. A lot of people were running online programs. We were running lots of webinars, all those type of things. And now we're at a different stage of our business. So now we got to try and anticipate what's going to happen this year, which is not easy. Even though we've been in business for 25 years, this business for 20 years, it's not easy to forecast the future. But based on our historical numbers, we can make some assumptions. And if we're not 100% sure, we can look at different scenarios, okay? And in my case, I've got my scenarios are influenced by projects we pick up. For example, there's an opportunity. I've just received a message for a project that I've got now, okay, that we had put in an RFP from. Tomorrow I've got a meeting about another project that we're working on. So all this information helps me do my forecasting, okay? So in the beginning, it's quite difficult, to be able to do this. But as we go along, the more information we have, the better it is for us, okay? So keep that in mind, that the more information you collect, the better it is for you, and you can look at different scenarios. What if we get this project? What if we don't get this project? And in your business, you want to do the same thing. The next thing you've got to understand is, let's say you're brand new. So you're brand spanking new, haven't got any experience, have no idea. Let me just say to you, there are people out there that are experts in the industry. I know, for example, when I was involved in retailing, I was involved in coffee franchising for a while. We could do quite accurate forecasts. Not 100% accurate, but we could do quite accurate forecasts based on what we knew about the industry, okay? So this is really, really key that you understand this, okay? So what you can do is you can interview existing business owners and industry experts, and they will be able to give you an idea of things like what are the best sales months, how much revenue you should be expecting in the different months. All of these things will help you create this. So understand that, okay? So really understand that you should be getting advice, especially if you're a new business. Now, let's just think of, and the objective here, and I'm going to show you now, one of the objectives today is to show you how to do a cash flow forecast. I'm going to do two examples, one for a service business and one for a retail business. There are basically two elements of a cash flow forecast. You've got the sales forecast, which will influence the inflows, and then you've got the expense forecast, which will influence the outflows. Okay, so there are two main elements of a cash flow forecast. And remember what I said earlier on, the key thing here is to make a reasonable prediction. That is the key, to make a reasonable prediction as you go forward. And I always encourage business owners. To be conservative and realistic. So be conservative, especially when you do sales forecasts. Be very, very conservative in your projections. I find that what happens often with us is we're a bit optimistic. And we will then project sales too high and underestimate our expenses. And just be very careful of that. And I've seen this many, many times when I speak to business owners, that this is one of their challenges. The other thing to think about is to take seasonal fluctuations into consideration, okay? So understand that some businesses like mine will, at different times of the year, things are slower than other times of the year. So we need to be aware of that and plan for that. So some of you, for example, have slower months in the summer, or some of you will have the reverse. The summer will be the busiest time for you. So, and then we have inflow. So where does inflow come from? You have inflow from your sales. So these are cash sales, things like credit cards, debit cards, checks, and cash. That'll be money coming in. And then you'll have cash from your accounts receivable, okay? So people that pay you 30 days, 60 days, 90 days, whatever it is. If you're getting any loans to the business, say you're the owner of a business and you're going to loan the business some money, which is often a source of funding for small business. Any bank loans and other sources, and any grants that you get, okay? So all of those things will be inflows into your business. So when you're working on your cash inflow, you want to take those things into consideration. When it comes to the outflows, you want to think about all your monthly operating expenses. So what are my running expenses for my business? You want to think about your cost of sales and your inventory, okay? So you need to know what your profit margins are so that you can work out your cost of sales. So your profit margins will be the difference between 100% minus your cost of sales will give you your profit margin. So let's give you an example. If your profit margin is 30%, your cost of sales will be 70%. If your profit margins are 40%, your cost of sales will be 60%. See what I'm saying? So you need to know what that percentage is. And if you don't know, it's very, very easy to work out. You just ask your accountant to check your income statement for the previous year and calculate what your operating profits were. And then your startup costs and any asset purchases. So if you're a brand new business, you'll have startup costs. If you're an existing business, you're going to purchase assets to grow and scale your business. So you need to know what those are, and any loan repayments. So you'll see it discusses, it includes all the inflows of your business and the outflows. And depending on what stage your business is at, these numbers could be very different. All right, so what I'm going to do now, firstly, I'm going to turn off my camera, and then I'm going to show you how to do a cash flow forecast. And I want you to understand this. I really want you to understand this, because for some of you, could be the difference between surviving and not surviving over the next 12 months. So that's the first thing. The second thing I'm going to encourage you to do is that you do this every year. So if you haven't done it yet, I would encourage you to start working on it now. And then what you want to do is you want to update it on a regular basis. So as you get more information, you can update it on a regular basis. Okay, so keep this in mind that this is a dynamic document. It's not something that is static. It's a dynamic document, and you need to change it as you go through the process. All right, so let's go through. Let's say I was doing this cash flow from from April. So I've decided I'm going to do a cash flow from April. Let's say that's my financial year. I usually will do it in January if your financial year and your corporate year are the same. But let's just say that this is my financial year from April through to March. So that'll be my starting point. Okay, so that'll be my the first thing I will do, and then I will insert all my products. Or I could do departments. Let's say I was a retail store. I could departmentalize my business and say, this is for my bakery, and that's for my produce section. Okay, my produce section, and then a grocery section. Just try and think of all the butchery, if I've got a butchery, and then health and beauty aids could be the different departments in my business. Okay, so that's the first thing. And then I would go through sales forecasts. So let's say, for example, I look at last year's numbers, and in April last year, we did $20,000 in our bakery. Okay, so $20,000 in our bakery. I will look at the inflation rate for a bakery business. And let's say, again, you would know your business better than me, but let's say in your business, bakery sales, inflation was 12%, which is a lot, but you know, inflation has been high over the last 12 months. So let's say my forecast for April is 22,400. Okay, then I'll go for May, and again, you've got to go through this thought process. Let me just think of a bakery. April is Easter. Let's say your sales go up in April. Let's say they come down a little bit in May. Okay, so let's say you'll do a sales forecast of 18,520 for May. For June, let's say that sales come down a little bit. As the temperature warms up, maybe the sales of baked goods come down a little bit. So then you could do a little bit of a reduction. Let's say July, you have similar sales. And again, remember, you're going to do all of these forecasts on previous year's numbers. If you're a brand new business, you're going to speak to an expert or somebody that's already in the business, and they're going to help you to calculate what your expected sales are. Okay. Let's say in August, sales come down a little bit more. Let's say 15,140. Let's say in September, because the kids are going back to school, the sales start coming up, you tell me, because you have experience. And then October, as it gets colder, sales go up again. November, sales go up again because it's colder. So let's say December, because of the Christmas period and the holidays, maybe your sales even get better. Let's say you've got 19,540. Let's say in January, sales come down a little bit. And in February, let's say it's a little bit of a quieter month because it's a short month. And let's say March, it goes up a little bit. So there you go. So what you're going to be doing is you're going to do sales forecast based on the previous year, okay? Or the previous 3 years. Let's say you think that, last year wasn't a good year to estimate on. You could go the previous 3 years. All right, so the next thing you want to enter into this table is your cost of sales. The first thing you want to do is calculate what your bakery gross profit margin is. And usually you can get this from your point of sale system. And if it's not in your point of sale system, Often business owners will know because of experience, because of what they do and things like that. But really, the only way you can work out the profitability in your bakery, your gross profit margin, is by calculating the sales and knowing what your opening inventory is and your closing inventory, okay? And the purchases. And working that out, you can calculate what your gross profit is. And if you're not sure, just speak to your accountant. So I'm going to tell you that in the bakery, it's reasonably high. So let's say it's 70%, okay? So gross profit margin is 70% in a bakery. For this example I'm working out, so your cost of sales will be 30%, okay? So the total will give you 100. So there's an example of that. Let's go through the next department in my business is fresh produce. So let's say we get expecting to do 14,000 in April, 15,000 in May, 16,000 in June, 14,000 in July, 17,000 in August, 15,000 in September. And these numbers I'm just taking out of my head. So I don't want you to go and say, I know Andrew said you've got to always round off numbers and things like that. I'm just doing these numbers to make it easy for me to do this calculation, okay? There you go. So there's my fresh produce forecasted sales for the next 12 months. And the profit margins on fresh produce will probably be about 50 or 60%. So let's say it's 55%. Our cost of sales will be 45%. There you go. So this calculates based on, you've got to know some of these numbers, which these are available. I mean, it's not like you have to do tons of research to find this out. If you spoke to somebody else in the business, they'd be able to tell you. When it comes to your groceries, what we'll do is you'll do the same thing. Let's say groceries are usually higher sales in the supermarket, lower profit margins, but higher sales, okay? Just to give you an idea. Let me just put in some numbers, 24,000, 23,000, 28,000 in October, 29,000 in November, 32,000 in January, 25,400 in January, 24,000 in February, and 23,000. There you go. So those are my grocery sales forecast for the next 12 months. My grocery profits will be lower. Let's say it's 18%. Okay, my profit margin, so my cost of sales will be 82%. Okay, so again, you'll see based on my industry experience, which I don't have anymore, I used to have, but based on my industry experience, all my previous year's numbers in my business, I will be able to do this. All right, butchery, let's go through that. The sales will be a little bit lower, I think. Let's go there. Just put in some numbers here. And again, remember, I'm just guessing numbers. This is not, these are not scientific or calculated. I'm just putting in numbers, and you would do the same thing with your accountant. Or if you know your numbers yourself, or you do your own forecasts, this is the way you would do it. All right, okay, so let's say the profit margins on meat, let's say they 58%, so your cost of sales will be 42%. And then we've got health and beauty aids. These sales will probably be lower. Okay, so these sales will be lower, but the profit margins will be higher. Okay, so if some of you have been reading the media, Loblaws went in front of the government, and they were speaking about the profit margins that the supermarkets are making. And one of the statements that Loblaws had was that they were making extra profit because of their pharmacy sales, so Shoppers Drug Mart. So health and beauty aids, the profits are always a little bit higher. So let's say 75% is your profit margin, and your cost of sales will then be 25%. Okay, so what we've done here is we've done a sales forecast, okay, for the next 12 months, okay? And you would do this for your business. If you had more departments, you departmentalize it. If you want to put it in products, you could put more columns and all that. but I think this really helps. I do this every year with my business. I have a few services that I offer, and this is the way I do it for my business. And it works really well because then you create a little template for yourself, and then the following year, you just work on it, and eventually you get quite accurate. Okay, you can make it pretty by putting colors and things like that if you want to. All right, so and remember, I'll send this template through to Chris. If any of you want it, you can get it from Chris. All right, so this now carries the sales numbers forward. Okay, so this comes from this template over here. So this carries the sales numbers forward from my projection. So this is what I've projected for April, for May, for June, July, August, September, October, November, December, January, all the way to March. Now let's go through the sales. Because this is a retail type business, all of the sales will probably be over the counter. So people will pay with credit card. People will, what happened there? Did I stop sharing? Can everybody see my screen? Your screen sharing is paused. So can everybody see my screen? Just tell me if you can see my screen. No, okay, you can't see my screen. All right. Let me just see what's going on here. Share. Why is it saying at my screen? Let's see what's happening here. Let's stop this share, and then I'm going to share again. Okay, there you go. Now you can see my screen. All right, I don't know what happened there. Sorry. I don't know what happened. Yeah, you can see my screen. All right, I don't know what happened there. All right, let me just move this out the way. Maybe I bumped something here by mistake. Okay, so there you go. You've got all these sales there, and then you've got all the cost of sales, okay? So the cost of sales was the inventory that I purchased to make these sales. Then you start going through each month's sales. Okay, let me just, thank you, Brenda, for telling me that you can see it. That's really helpful. So now I'm going to go through all my monthly expenses. Let's say I pay my accountant $150 a month, okay? Let's say my marketing and advertising is going to be about $450 a month. Let's say my rent is $2,500. My telephone is $120. My utilities are $250. Let's say my credit card fees are $254. Actually, you can even put a percentage in there. Let's say 0.3% of C7. Okay. Okay, there you go. Yeah, let me just copy this across. Yeah, there you go. So it automatically calculated the, that's actually wrong. Let me just put another 0 there. Calculated the fees for credit card fees. There you go. 3%. 3% is 2,000. Sorry, made a mistake. Let me just fix that up. Okay. So there's your bank and credit card fees. Your employee salaries, let's say, is $6,000 a month. There you go. Let's say you're an owner, you draw $4,000 a month. There you go. Let's say you've got loan repayments of $1,254. Let's say your insurance is $65 a month. And if you've got any other expenses, let's say $1,245. There you go. There's your cash flow forecast. What you would do is you put your opening bank balance here. Let's say we had $1,487. There's your cash flow forecast. Does anybody have any questions on this cash flow forecast? Any questions at all on this cash flow forecast? Anything you'd like me to explain a little bit more? But just remember, obviously it'll be different for your business, but every business will have their own cash flow forecast, okay, with their own numbers, and you will do this based on previous year's numbers, okay? Then what I encourage you to do is, now that you've done your forecast, what I encourage you to do is every month to go back in and put in your actual numbers, okay? So you're going to put in your actual numbers at the end of every month. So what you would do is you'd go and put in your total sales, you'd put your cash from sales, and you'd put all those type of things in there, okay? If you're a brand new business, let's say, for example, you were buying some assets for your business, okay? And let's say the equipment for this new business was going to cost you $185,400, okay? This will tell you how much cash you need to borrow. So in this example, it's $159,000. So let's say you put in $40,000 of your own cash, and maybe you get a loan of $120,000. And let's say you get a entrepreneur, futurepreneur loan of $15,000. You'd enter all of those numbers into it. There you go. So the nice thing about the cash flow, it can even show you how much money you need to raise to avoid going into negative cash flow. So it's a very, very useful tool. And I've used it, since I've started my business, and I will never stop using it. It is one of my most important cash management tools. You can do this on your own, or you can sit down with your accountant and they can help you. Again, depending on how financially literate you are. All right, let me do one for a service business, or even if you were a SaaS business, for example, depending on your business. So let's use it for a business like mine. I do webinars, I do workshops, okay, I do training programs, Actually, no, let's do it actually for a salon. Okay, so we do hair, we do nails, we do pedicures or whatever. I'm just putting stuff down. We do makeup, we do massages, let's say. Let's just see if there's a question here. Are we getting his templates with examples? Rad, I mentioned already that I will send through the template to Chris, and you're going to ask Chris and he'll send it to you. Okay, that's how this works. So there you go. If you want the template, I can send it through to Chris and he'll send it through to you. Okay, so here's an example. I'm doing this for a service business. Same concept again. Remember, if you've got last year's numbers, it really helps. If you don't have last year's numbers, if you're a brand new business, what you want to do is you want to find somebody that's done it before, and they can help you with this. All right, so let's say I'm doing hair and I charge people $100 for doing hair. How can we contact Chris? Chris sends you an email, Brenda. That's how you contact Chris. He's the guy that communicates with you. He sends you an email. There you go. Chris's email's in the chat, okay? So you can message him and I will send him this template. Okay, so let's say I do hair and I charge people $100 per person, okay? And then let's say I do nails. Let's say I do nails and I charge, I've got no idea how much these things are. Let's say $50 per person. I'm just putting numbers, eh? Don't go home this afternoon and say, Andrew said you should pay $100 for hair and whatever. I'm just putting in random numbers here. And let's say I'm doing pedicures and those are $45, okay? Let's say I do makeup and I charge $120 for that, okay? And you can make this thing look pretty. I mean, you could change the colors if you wanted to. So when you get the template, if you decide, no, I don't like, geez, Andrew put ridiculous colors. You know, you can change the colors if you want to, make it look prettier. I just want to put these products here to make it easier for me to see. There you go. Okay, somebody's asked another question. Let me just check this question. Yeah, I'm offering consulting services and a couple of clients are delaying their payments for months. These are money should come out, but not yet in hand. Shall I enter them as income? Not even yet in my hand and not sure when I'm getting them. So you don't enter it in the cash flow. You only enter it when you get paid. You don't enter it as income. Income is in your income statement, you enter it as income. In your cash flow, you only enter it when you get paid, okay? So that's the way you do it. So it's very, very important, Rad. Cash flow is when the money flows into the business. So if you're expecting it in 2 months' time, that's when it flows in, okay? And I'll show you an example now. All right, so let's say massages, I charge $200, eh? Let's say these are expensive 1-hour massages. Okay, so here's another question. As the founder of a software company, I don't have sales yet, some startup expenses while working on my MVP. Do I have the projections? Do I have to ask other entrepreneurs about the expenses? I'm not sure whether people will be happy to tell me that info. How do I go about projecting sales? Okay, so here's the thing. For if you're in a business that you haven't started yet, I would encourage you to get advice from an expert. But like anything, you know, projecting the future is always very, very difficult. So the more research you can do, but let's just think of things that you could do already. If you're starting a new business, you can quite easily work out how much your telephone bill is going to be every month. You can do all those type of things. If you're going to be renting an office, you can go and do research and ask real estate agents how much offices cost, and all those things you can work out. So it's not that difficult to calculate those things, okay? If you can get advice from somebody that started a SaaS company, but SaaS is very difficult because, again, it depends on a couple of factors. Depends on, are you going to run it on your own? Are you going to employ people? All of those things have an impact. So the more you know about your business, the better it is for you. All right, so let's say we get 20 people a month that come and do their hair, 25, 22, 23, 20, 19, 22, 23, 24, 26, 27, 25, okay? So again, you'd go through each month like I'm doing for every service you sell. If you were a consultant, you'd put all your different services along here. And if you had more, you'd add more rows. That's what you would do. Let's say nails, we do 25, 22, 23, 24. And again, all these numbers are based on previous year's calculations, okay, which is really, really important. There you go. And then you've got pedicures. Pedicures, let's say you've got 25, 32, 31, 15, 25, 32, 31. And I'm just putting in numbers in here. So don't take these numbers seriously because I'm just putting in numbers. You're doing makeup, let's say you do 12, and then 11, and then 10, and then 8, and then 9, and then 13, and then 15, and then 16, and then 14, and then 13, and then 12, and then 11. There you go. And then massages, let's say you do 15, and you do 16, and you do 14, and you do 15, and you do 16, and you do 17, and you do 18, and you do 19, and you do 20, 21, 22, and 23. All right, there you go. So there's my sales forecast. Okay, so my sales forecast for the next 12 months in my salon are this. Those are my numbers. Okay, let's say it's a salon that I'm running on my own. Okay, so I don't have any employees. And then you go through your cash flow. Let's use that example of if you're a consultant and you get paid late. If you make the sale in January or April in this case, and you only get paid in June, you only put the cash flow in June, okay? So that's the way you do it in cash flow. So you don't put the money when you received it. You put the money in when you received it, not when you made the sale, okay? So that was your question earlier on. Your question was about when you put the money through the cash flow. So it's a sale when you sell, but it's only an inflow of cash when you receive the money. Okay, Rad? So that's the way you do it. Is the sale is when you invoice the customer. The cash flow is when you receive the money from the customer, when the customer paid. All right, so this is this business, and let's say the accounting fees are $100 a month. Okay, they got a cheaper accountant. Let's say they spend $200 a month on marketing. They're working from home, so they don't have a rent. Telephone is $120 a month. Utilities, they're working from home, so they don't have that. Bank charges, let's say $200 a month. That includes credit card fees. They've got no employees. Let's say the owner draws a salary of $2,500 a month. Let's say they've got a loan that they're paying, let's make it a bit higher, $254 a month. They've got insurance of $154. They've got other expense of $654. They've got asset purchases. Let's say this is a new business and they need to buy machinery for $12,500. There you go. So this business has got a negative cash flow because it's buying equipment. Where's the money going to come from? Let's say the owner lends the business $10,000 and it gets a bank loan for equipment for $8,500. You put it in there. There you go. So there's a cash flow for a service business. This could also be a SaaS business, for example, depending on how much you charge. If you're selling a software as a service, if you have different categories, you'd put in different categories. If you just have one category, you just put in one category. But it's always difficult to do cash flow forecasts. It's never easy if it's a brand new business, but it's doable. I've seen it being done many times over the years. And on all of my programs, if you don't do a cash flow forecast, we don't put you through the program, so people will do this. And then what you will do is you will take this information, and then each month, as you go through, you will do it. You'll do your actual amounts, so you'll put actual amounts in here, okay? And that'll give you a more accurate number. So that's the advantages. If you create a dynamic document, it becomes more accurate. So I've given you two examples there. So I've given you two examples of cash flow forecast. Remember, I will send through these templates to Chris, and then you can just email him and he'll send you this template. But it's not a complicated template at all. For those of you that are good with spreadsheets, I realize there's a couple of little things I need to fix on it. But I'll fix it and I'll send it through to you, and then you can work on your own. And remember, for some of you, it's a very good idea to get your accountant to help you work on this, okay? Because you will be using previous year's numbers. Also, very often, if you're going to borrow money from the bank's going to ask you for this. So you can't walk into the bank and say, I know you asked me for this, but it's very hard to do. They know that. Okay, so just keep that in mind. They know that it's very difficult to do. But the point is, that's how they make a decision, because they want to know, how are you going to repay the loan? Okay, so that's what they want to know. So how do we improve our cash flow? Because that's really the key, is you want to know, how do you improve your cash flow? So here's the answer. It's very, very simple. Is make it easy for people to pay you. So accept credit cards. You know, this is really, really important. Let me give you a very good example. So I work with a lot of cities, okay? And let me be honest with you, to collect money from government departments can be very, very challenging. So I really struggled with that over the years. But nowadays, it's very, very easy. From my invoices, you can pay directly with credit cards. And how much do credit card companies charge? They charge about 2.5%, maybe a little bit more for some of them. But the point is, I get my money straight away. Otherwise, you have the same problem that Rad explained to me, that he does consulting services and he charges people and they never pay him. You know, they pay him late. For me, accepting credit cards is sometimes the solution. Does it cost money? Absolutely. Is it worth it? No doubt in my mind. And I've said this to business owners many times. It actually frustrates me. If I ever go into a business and they don't accept credit cards, it really frustrates me. The other thing you can do is to go after more cash business. So think about this in advance. You know, try and find customers that pay you on a regular basis, okay? So this is what you want to be doing, is you want to have customers that pay you regularly. And if you do this, you don't have a cash flow problem, or less of a cash flow problem, okay? The third thing you can do, and this is a very, very important one. Very often business owners say to me, I don't feel comfortable asking for my money. And I say, I feel very comfortable asking for my money because I know that's the only way I survive in business. So that's what you do, is you ask, you regularly contact your receivables once a week or once every 2 weeks, and that's what you do. Improve your inventory returns. And I mentioned this earlier on, but it's really, really important that you understand this, is that your inventory is money just lying in your storage areas. So just be very, very careful of this. Businesses that have inventory, businesses like gift stores, retail stores, things like that, toy stores, those type of businesses, furniture stores, lots of inventory. And if you don't manage that inventory really well, it's going to tie up your cash. And if it ties up your cash, it could give you cash flow problems. So understand that and just be aware of this, that whatever product you bring into your store, if you're in a retail store, it's got to have, fast turnover. If you're a service business and you want to add a couple of products to your business, try and find products that turn over quite quickly. Otherwise, it ties up your cash. So retailers, for example, some of the larger groups, what they'll do is, if they're bringing on a new product into their business, they'll test it for a while. So they'll test it for a while, see that it works or that it sells, and then add it to inventory. Otherwise, you could buy a product, bring it into your store, it doesn't sell, then you have your money sitting around, which really, really stresses me. The other thing you can do, which is not my favorite thing to do, but if you're having a bit of a cash flow problem, you could liquidate your assets. One of the things that I realize sometimes with businesses is we've got assets lying around that we're not using. And if we've got assets lying around that we're not using, maybe liquidating those and turning them into cash makes a lot of sense. The other thing you can do, which is a very, very good idea, is almost do like a progress payment type thing, okay? So what you can do is ask customers to pay a percentage up front and then pay as they go along, okay? So those are some of the things you can do. And then something you can do, which is often what small business owners don't do, is they do credit checks. So just make sure that you, if you're a little bit nervous of a client, do a credit check. And just something else that's really, really important. If you're in a business and you've got customers that are taking longer to pay or anything like that, I want you to analyze that and just try to understand why is it that they're not paying. Most customers should pay on time. They've got no reason to not pay on time, okay? So just be very, very careful of that. Or just negotiate with them. Just say to them, you know what, we accept credit cards. When we do the service, just put through the credit card, because there's nothing worse than not getting paid for your work. I know, for me, it's something that I'm really, really paranoid about, is not getting paid. So I always try and anticipate those things in advance, okay? So those are some of the things that you need to do. All right, so let me just summarize. And then if you've got any questions, I will answer some of your questions. But just remember, Thursday, I'm going to answer a bunch of questions that business owners regularly ask. And feel free to sign up for that event on Thursday, where I'm going to discuss a little bit more specifics or examples of that. But let me just summarize. Here's the thing that I realized, is that if I want to manage my money and I want to survive in business, one of the first things I should do in my personal life is create a personal budget so that I know exactly how much money I spend every month. And I stick to that. So I stick to that. And remember what I said earlier on, some of the most successful business owners I know are very, very frugal. And I'm going to encourage you to be frugal. In this economy, being frugal is really, really smart, okay? That's the first thing. The second thing is Once you've created your cash flow forecast, what you want to do is you want to update that regularly. So let me give you an example. Let's say I'm a brand new startup. So before I start my business, maybe doing a forecast is very, very difficult. But once my business is up and running and I'm starting to generate sales, then it's really not that difficult, because now I've got some information that I can use I've got some information that I can use to help adjust my forecast accordingly, okay? So update your forecast regularly. The other thing you want to do is make cash flow your problem. Why? It is your problem. Remember, at the end of the day, the buck stops with you. If your employees don't get paid or anything like that, this is your problem. So understand that. So make cash flow your problem. Never run out of money. This should be a rule in life, in business, is you never want to run out of money, okay? So make sure that you borrow money or ask for money or speak to your family about money or friends about money long before you need it. You don't want to leave it to the last minute, because this, as a business owner, has been my biggest nightmare. Cash flow has been my biggest nightmare. And running out of money as something that kept me up at night many, many times over the years. So you don't want to run out of money. The next thing is you want to take the right steps to stop cash flow problems or to avoid cash flow problems. And what are those things that you can do? Firstly, make sure that you generate the sales that you need to. So focus on sales, okay? It's really, really important that you focus on sales. Sales solves most problems. Secondly, make sure you follow up and collect your money. So making the sale is part of the thing, but making the sale and getting paid for it is just as important. And also ensure that your profit margins are good, because if your profit margins are very, very small, you've got to do high volumes. And if you do high volumes, it can be really, really challenging. So profit, you take profit to pay your fixed expenses. So you need sales that are paid on time and that are profitable. Make sure you manage your inventory. This is really, really important, because if you have too much inventory, it ties up your money in your business, and you've got to be very, very careful of that, okay? And make sure you're diligent. You know, if somebody owes you money, pick up the phone and phone them and say, I need my money. And if they don't pay, you may have to fire them. You know, these are some of the difficult decisions we make as business owners, okay? And then ask your accountant for help. But really, I think this is one of the most important parts of running a successful business. And this is, I don't want to say 80% of the problem that a small business owner goes through, but it is one of the key challenges that they struggle with. Every business owner that I speak to struggles with this, you know, because we've got a lot of, actually the other thing that creates problems is, you know, your taxes. You've got taxes to pay and things like that. One of the questions I've got here, what percentage is the right profit margin? You know what, that all depends on the business. I can't give you a one size fits all, because there is no one size fits all. It really depends on the business you're in. But a lot of this research can be done online. I mean, depending on what your business is, just go online and I'm sure somebody's done research or published something and things like that. I mean, I know the businesses that I'm in. Again, SaaS, I've got no idea. Okay, I've got no idea, because SaaS is such a broad term, you know, but usually the profit margins on a SaaS business would probably be very high. Actually, just think of it, depending on what your service is, if you don't have a cost of sales, so if you're in a SaaS business and you're selling software, there is no cost of sales. So depending on what you're creating, who's creating it for you, depending on your cost of sale, all those things would be things that will influence your SaaS. But I mean, if I was you, I'd go on to Google this afternoon and just Google it. Just type in, what is the average profit margin for a SaaS product? But again, what does SaaS mean? SaaS is a broad field that includes so many different technologies. So, I mean, so much different software that can be quite confusing, but I'm sure you could find that out. And if you can't find it online, I'm sure there's somebody at one of these incubators or one of these tech places that could help you. All right, any other questions? Anything else you'd like to ask? Just remember, Chris will load this webinar recording onto the My Main Street website. You register for the website, you can watch this webinar again, okay? I will send through the template that I used. I'm just going to fix it up. I realized there was a little mistake on it. I'm just going to fix it up, and then I'll send it through to Chris. And if you'd like a copy of it, you can ask him for it, and he'll send it to you. Also, remember that on Thursday, we're having another session, the final session of this My Main Street sessions. And it's been wonderful presenting to you over the last 18 months or over a year, these webinars. And hopefully you've learned a few things from me. And I encourage you to keep learning, keep attending webinars, keep attending seminars, keep reading books. There's so much to learn. None of us know everything. I definitely don't know everything. I've learned a few things along the way. But what I do know is that if you run a business and you run out of cash, you've got a problem. And one of the tools that you can use to solve that problem is to create a budget for your home first, and then create a budget or a cash flow forecast for your business, and then manage that money in your business. Be frugal, you will never regret it. Collect your money, manage your inventory, make sure every product or service you sell, you're making a profit on it. And I think if you do that, you can be very, very successful. The next 12 months are going to be tough for small business because of some of the things that are happening in the economy and the interest rates and things like that. But you know what? There's no doubt in my mind that we'll come through this really difficult stage as business owners, and we'll come out better on the other side. I mean, some of us have just been through COVID. I never thought so many businesses would have survived COVID, but we survived. And some of us even thrived during COVID. So, small business, we're resilient, we persevere, and we can succeed. Is it easy? Absolutely not. It can be really, really tough. But keep learning, keep trying, and you can build a very successful business. Thank you very much, everyone. I'll see you on Thursday, same place, same time. Have a great afternoon, and thanks for joining me.